Hello, Colin. How are you, sir?
Good, thanks. How are you doing?
Not too bad. Not too bad. I'm trying to make sense of the world. The markets are moving and still moving in strange ways. Copper, gold, silver seem to be having fun. Uranium's sitting on a bit of a pause at the moment, eh?
Yeah, I mean, I do think that we're starting to see a little bit of a pickup here. There's been a few things in the last couple of weeks or so that have been, pushing the uranium price, inching it up higher. I think as a sentiment indicator, we've seen the Sprott Physical Trust trading closer to NAV. I think they've raised over $60 million in the last 3 weeks in that condition, bought maybe 300,000 pounds in the spot market. So I think we're kind of turning the corner here going into year end.
Well, I hope so. I hope so, because there's been quite a few sort of, well, as usual every year, a few catalysts have come and gone. It's not, and they themselves haven't done much except for getting the fervent retail investor excited. But it is a kind of cumulatively, does seem to be quite a build up here. How are you reading the kind of political landscape in North America? It seems to be pretty positive and starting to move.
Yeah, I would say so. I mean, we've seen several things in the U.S. that really are compelling with respect to uranium and the read through for longer term conditions. Everybody's talked about, and it wasn't a big secret, but that Microsoft deal with Constellation for the restart of 3 Mile in Pennsylvania. I mean, that's not necessarily political, but a great indicator of or some recognition of how much big tech is going to want to be sure about energy supply, but also I think they want to mind their carbon footprint. So they're looking for sources of energy as ESG responsible companies that are going to meet those carbon emission standards so that they can sell products that are carbon neutral and stamped as such on the box. So I think that's an interesting outcome. The DOE $1.5 billion loan guarantee for the restart of Palisades in Michigan is another piece. The U.S. and 21 other countries have this mandate from COP28 back in December of last year to triple nuclear energy generation by 2050. And you're starting to see pieces, especially in the West, that will support that going forward. So I think there's just a bunch of things bipartisan supported coming out of the U.S. In support of nuclear that I think is going to really send the message that the government's going to be supportive. There's initiatives to streamline the permitting process for new nuclear plants. There's a mandate to the NRC to streamline the environmental process of issuing licenses. So I think that we're starting to see real political bipartisan support, particularly out of the U.S. for a renaissance that's going to support a renaissance in nuclear.
Well, I hope so. We've even seen, and talk about the kind of geopolitical aspect here. We won't get into Russia, Ukraine yet, but or Kazatomprom and China, but Western allies like Australia. I would put Africa 1 foot in that camp as well in terms of access to the uranium coming out of there. Australia, for instance, they've recently announced the Labor government have been famously anti nuclear for so long. I think elections coming up, they have actually mooted and suggested that they're going to actually launch a surprise inquiry into nuclear energy. So it's all coming down the line. So I think we can assume that for this conversation, there's a ton of demand that's being created all the time. Two things that interest me, though, is one, where's the supply coming from? And two, is where is the financing coming from? Who is going to be bringing the money to the table? I think recently the NEA was examining sort of financial strategies and saying we need to get going, guys. And again, so from a North American perspective, in terms of noises around the financing initiatives, are you hearing much?
Yeah, I mean, I guess the first piece of that, in Australia, I read a survey from this year. It may have been conducted in the fall of 2023, but I think 61% of people surveyed in Australia were in favor of nuclear energy. And, if you go back and look at 2011 in the same survey, they identified 61%. And, 2011 was definitely a sensitive time surrounding nuclear energy. With Fukushima happening, but it was 61% of the country was against nuclear energy. So there's been a major shift, and I don't think that shift is limited to just Australia. We're seeing surveys from multi-country surveys really supporting nuclear energy. And I still think that there's a major, or what the surveys are exposing is that there's still a significant component of the population that believes that nuclear has a large carbon footprint, a significant carbon footprint. So I think, we see accelerating support in the general population, which I think trickles into political support. But there's still, with education about nuclear, its safety track record and its emissions footprint, that you're going to see even more momentum from the public in terms of support for nuclear. And I guess at the heart of that question was also about financing, and it's been in the news quite a bit, but I don't think you can understate the importance. A couple of weeks ago, when a bunch of banks got together at Climate Week in New York City, 14 major global banks announcing their support in front of the 22 countries that committed to triple nuclear power generation by 2050. 14 major global banks stating their support for that growth. And that's extremely important because people, politicians, and everybody, it's one big organism. They're all taking signals from each other, which is why I think big tech supporting nuclear is so important. The banks, there are all these pieces that it's going to require to have a nuclear renaissance outside of countries that pay for their own kind of in less capitalistic environments, let's just say. And having banks signal not only to investors in nuclear, but the investors in those banks that they're going to be there to support as a group the nuclear sector has great read through, because I think that both big tech and those banks are regarded as being home to some of the most intelligent people. And those people have done the work and looked at the cost benefit of having nuclear as a solution to climate change, and they're in favor. And I think that provides a great signal to the market and investors.
Well, I think the interesting thing is this, look, bankers want to make money. Let's be really clear about that. So it's not necessarily the green agenda driving it. It's a component of it, but they're going to want to make money. You worked in the Straits, ex-banker myself. I think that's the interesting thing that people are kind of honing in on. In fact, the arguments back to the Australia stuff is, the coalition's arguing that they can do it much cheaper than the current Labour government are suggesting. So there's going to be a conversation around the economics just stack up as baseload energy. It stacks up. It's there when you need it, and it's green is good. But these guys want to make money, and that's why they'll back and put their finances behind that. In terms of the kind of supply, I want to still stick with the US a bit, if you don't mind. We've recently sort of seen some conversations happening around, well, maybe all those companies talking about getting to production, when they say they'll get into production or at all, won't necessarily do that, right? It's a guy that's kind of analyzed these things for a long time. How are you kind of reading the kind of players in the market? Are they going to be able to kind of hit some of the supply numbers that the industry is using at the moment? What's the knock-on effect for investors if they don't?
It's a big question. For sure, in my history, 16 years as an analyst, the permitting, licensing, building, and transition to production of mines is extremely difficult, and quite often lags on either a time frame or on performance or on productive output. And I think that is one of the biggest risks to exacerbating the current supply shortfall that we have in the market. I think that's a big part of the reason mines, especially large mines, taking longer to come online. We need all the smaller incremental production that we can get. We're in a supply deficit, but larger mines taking even slightly longer to come online than people think, it is going to be further exacerbating uranium price. And I think that the current situation with high uranium prices, it's much different than some of the last couple of cycles. It's more analogous to cycles generations ago. This time we've got uranium price going up, but we've also got this insanely bullish mandate to triple nuclear capacity by 2050 from some big countries. But even in WNA numbers, you've got a doubling of uranium demand by 2040, with a huge potential shortfall. I mean, to truly backfill that amount of demand, which, by the way, is also underlain by a big kind of ramp up of production, and nuclear reactors. New nuclear reactors generally require 3 times the annual fill in the initial production. So I mean, there's quite a queue ahead of on the demand side that's going to be very, very hard to backfill. So I think that's going to be quite bullish short term for some of our neighbors at Premier American Uranium, being in Wyoming, New Mexico, and surrounded by some what I call neo producers, several companies that are in the process of ramping up production. I think that's going to really support higher uranium prices short term for them. It's going to be beneficial for what we're trying to do, which is build a pipeline of assets that can feed into productive facilities or our own at some point in the not too distant future within the decade. And I think that uranium prices are going to be there to support it because of the risk that you're talking about on the supply side. It's extremely difficult. And we're seeing it from even the world's largest producer, in Kazakhstan. You're seeing the difficulty or the challenge, or potentially even the lack of incentive for them to backfill a supply gap when they make money at higher uranium prices. And I'm not saying that's not a conspiracy theory. That's just a business proposition. It's very hard to replace resources once mined. So the best strategy, if you can achieve it, is higher uranium prices. And you don't get higher uranium prices by jamming excess production into the market. We saw exactly what that does to a market over the last decade. So I think that we're in an environment where, unlike recent, let's say in the last decade and a half, uranium price rallies, this one is backed by an extremely bullish and accelerating uranium reactor pipeline that's gonna support demand. So I'm quite bullish on brownfield assets in the U.S., newer ISR production in the U.S. At these uranium prices, I think that there's quite a few deposits that could be economic. And I think that these uranium prices go higher, not lower, because I don't see enough production to address the current supply deficit in the market right now.
Right. And look, and I think for the sake of this conversation, otherwise, like I say, we could go far and wide. We're going to stay away from the kind of downstream enrichment, with Sanchez and Framatome and Orano, Westinghouse, whomever. That's an entirely different conversation. This is going to be about uranium specifically and its role within the kind of nuclear renaissance. If that's okay with you, if we sort of look at your experience, right? We're not offering advice here. We're just saying, in our experience, in banking from days gone by, there's a bunch of ways that you can play this market going forward. Obviously, sentiment has been a big driver in the last 2 years of meaningful, three times price gains. That's one way to play it, but fundamentals are really, really important. There's a big kind of M&A element going on here as well. And, there are teams that have done this before and teams that have not. There are teams that got access to capital and those that have not. There's teams with, good assets and some not. And, there's a real kind of mix of games at play here. When you're looking at the market now, and as with your investor hat on, or my investor hat on, I mean, how do you survey the landscape in terms of the ways that you could play uranium in your portfolio, for instance?
Yeah, I mean, that really, without reinforcing the disclaimer that, we're not giving uranium investing advice here whatsoever. For me, I'm looking back to February of this year and where uranium stocks have gone with uranium price. I mean, there's only a small handful of uranium companies that are trading at a premium to where they started the year, and especially most are down double digits from the highs from the uranium price highs of February. We hit 107 in early February, and I'm looking at those tables personally, looking for the ones that demonstrated the most leverage leading up on the upswing. That was the first time I think that we moved through. We're at $83 uranium right now. The first time we moved through $83 uranium, I think, was since like 2008 was in the back end of 2023. And so we had an extremely strong rally into that. But now I'm using that. I'm always looking at companies to see if anything's changed, but I'm using those price performances leading up to that $107 price peak as my barometer for which stocks. And it's quite easy to go through, the 15 or 20 that you might be really wanting to put significant money, that have the liquidity that you may want. And everybody's different. So I don't really want to talk too much to that, but I'm using that we have a recent analog for how certain stocks are going to perform into a uranium price rally. I think that we're going to see momentum. We might see less volatility in uranium price short term, but that's good. Building fundamental price strength into the middle of next year is going to, maybe uranium equities won't be as leveraged or as whippy as they were in the first instance, but I think that provides investors a little bit more control or time to just process where the market's at. I mean, for sure, like what we're seeing right now, what I'm seeing is I'm seeing the market have days where VIX spikes and the market goes down, and uranium stocks are showing 1.5 times beta to the broader market, and nothing's changing in the uranium thesis that day. So for me, those days are an opportunity. The volatility in the space that we're seeing that doesn't have much to do with the fundamentals are opportunity. I'm net bullish and net long, both career wise and investment wise. But I do think that some of the volatility will start to in uranium stocks, the bigger swings, in the 50 to 200 million market cap range, seeing them move around 3, 4, 5% in a day where there's no big uranium news. I'm starting to treat those as opportunities because I'm starting to get really comfortable with that we've kind of found the bottom in uranium spot price. At least, it seems to be, I don't feel like we're heading back to 65. I think that the trajectory is going to be upward from here, with some swings. Is it possible to go below 80 between, for sure. We've seen that kind of volatility. There's no question. But if you're going into it with, names that you've done your research on, and you've got confidence in the management team, I think you can be long and shrug off some of that volatility. It's extremely hard to time the market and to trade in and out on volatility in stocks. So pick your favorites and buy a weakness.
I'm with you. I'm a lazy investor. I want to do the hard work at the beginning and then just sit back and wait for these things. You said a few things there in terms of the way that the market is rewarding companies in the sector, and there's probably a few other variables too, which you haven't mentioned. But one, do you think that those things that are being rewarded should be rewarded, and are there things which are not being rewarded which should be rewarded?
Yeah, I think so. I mean, for the most part, it's really hard for me as a former analyst to kind of section or talk about the entire uranium investment opportunity as kind of groups of should and shouldn't be rewarded. I know that's the heart of the question, so I'm not trying to dodge it. But I see some stocks that I think are undervalued that are not being rewarded. I see others that I think are being treated kind of according to their prospects or their potential. And I see others that I think get treated quite positively because maybe they have liquidity advantage or there's a lot of different things that you need to watch. But in general, I think the market is starting to do a pretty good job of separating out the quality from the lower quality. And I think that, through M&A, you're going to start to see some of the variables within each of the equities kind of taken out of the equation. I think there's some good assets out there that are not necessarily in the right hands for some of the characteristics you mentioned, like, do they have access to capital and so on and so forth. So you're going to start to see M&A that will make a lot of sense in terms of moving quality assets into hands that can advance them.
Right.
So
yeah, I think that's a fair comment. Look, and I'm going to be careful about the next question, so I don't want to hone in on any one company or groups of companies specifically. But we've seen over the past couple of years a lot of M&A. We've seen some M&A very recently, happening again. And I'm sort of intrigued by some of these comments I sort of see when these things happen, like the shareholders of the companies being acquired are quite shocked that there's not some huge premium, a doubling or trebling of of what they think they should be paid. It's usually a slightly more modest, 20, maybe 30%. And I can see why that's the case. Well, if I was buying, why would I want to, overpay unless I had to? We have got an example where perhaps, there was an extremely high premium given, but it was a rarity. Again, what do you say to people playing as part of the portfolio? I'm not saying they've made one bet on one horse in the uranium space, and that's all they shall see. I think most people have multiple uranium bets placed, but in instances for parts of the portfolio where it's clearly a takeout target because for some of the reasons the company hasn't got the ability to raise capital, they've kind of maybe got to the end of their run or their vision, and people are not backing them anymore. Do you think it's fine to have those sorts of projects in your portfolio of investments, or do people really need to kind of think long and hard about what their expectations are?
Yeah, I think I understand what you're getting at there. And I think that if you have a specific thesis on a uranium stock and that thesis relates to M&A because that company has an attractive particular attribute or group of assets, whatever the reason may be, I personally would recommend that you don't do partial research. If you are the type of person who thinks that company X is worth this takeout premium and you don't get it when an offer comes and you're disappointed, make sure that you're doing some sort of evaluation or read research reports. Figure out, not based on what an analyst has as a target for the company's stock, because that may be based on something that involves a thesis of development and eventual cash flow and the NPV of those future cash flows. But if you're looking at on an asset valuation basis because you like something about a company, then you need to go and look at what assets of similar size have been paid for in the market. Generally the market is things transact by definition at market, assuming no other outside influences. So I think that if I'm buying a stock because I think they have something in that company that's worth something to another company, then I'm going to do more than just make that assumption and buy the stock. If I have a certain number in my head that I think that it should be paid for as a premium, I'm going to go and back up that number. I'm going to look at, peers. I'm going to look at other pressures, like, is there going to be competition for that asset? If somebody makes an offer on something and no other offer comes and you don't like the premium, well, you just found out something about the market. If something is valued more highly by another group in the market, then a superior offer should materialize. So, I definitely have seen a bunch of M&A where people weren't happy with the premium. Generally, you hear that kind of feedback from shareholders have been holding a long time, especially if there is, some period in the not too distant past where the stock traded at a premium to whatever that implied takeout valuation was. You're going to hear friction, but at the end of the day, you really need to look at, why the M&A is taking place. Is it becoming a stronger company because of it? There's always generally there's an opportunity to stay invested and, get the returns from the combined entity that you were hoping for. So it's a tricky question, but I guess to sum that up, I'd say, do your own research and calibrate your expectations.
I think that's right. Because I think, look, and I have to dance around it because I don't want anyone to assume we're honing in on any one deal or transaction that's happened. It's more a case of not investing advice, but it's about helping people think about the way that they go about making assumptions on their own investment strategies, right? So something you said there, maybe don't look at broker reports and expect that the companies to hit those targets. Those targets are in extremis in the best possible scenario. And let's remember that some of those brokers are incentivized to pretty much assume high numbers because they want to raise money for those companies. They're incentivized a very different way from you as an investor. So just think about it. As Colin says, maybe look at some of the transactions, look at the values achieved in some of those transactions. And that gives you a better sense of what's possible. That said, of course, exceptions to every rule. Sometimes the assets are worth more to one company than another, maybe because of proximity, maybe because it kind of fills a gap in their own kind of portfolio of companies. There you go. It's complicated. It's always complicated, isn't it? Should we talk about the kind of regulatory environment? Because the thing that kind of fascinates me here, again, it comes back to something you said earlier in the conversation, is like these mines, just whatever you're mining, it takes a long time from discovery through to production, with on average about 18.6 years, sort of up from sort of 13 years in the last 20. So because of kind of regulatory constraints, licensing, permitting, NGOs, social license, environmental, lots of things that you guys have to manage and be aware of. And rather crude language, don't F it up, guys, because there's a lot of moving parts. So how are you kind of feeling about the world of uranium, given there's this kind of public sentiment change from politicians, from public alike, about we need cheaper energy, this could be the solution? Is uranium going to get an easier run of it?
It's really hard to tell. I mean, it's extremely positive that we're starting to see, for the West, bipartisan support. In Canada, there's a fairly well-defined path, for the Saskatchewan guys moving into production. They're all moving through it fairly efficiently, in my opinion. But in no jurisdiction do you ever take away the voice of the opposition. So it's very, very positive to me that we're seeing support, from federal governments, supported by both sides of the aisle. and actually taking action to facilitate a more efficient process for permitting and development of mines, and other parts of the field cycle as well. But you will always have, and always should have that voice and the checks and balances from the other side, and that will generally kind of always slow down the process, rationalize the process, and you'll have to work extremely hard to make sure that all the groups are satisfied, all the stakeholders are being engaged, so that you have a chance to move forward with an operation. And I think that it's one of the reasons that I'm still so bullish on the uranium price, because despite all the things happening politically that we have visibility on, it's still going to be extremely difficult. Or let's say, it's going to be a lot of hard work to move through the permitting process, and to actual construction and production. And I think that will always occur slower than our optimistic views of mine production. And I think that's one of the main reasons that we're going to have a higher uranium price, because I think it's going to be, it takes a long time in my experience for even politically driven motivation at the highest level to trickle down to state and even regional levels. And because of that, it's going to continue to delay supply. And I don't think that you're going to see the same kinds of delays on the demand side. Like from a global demand perspective, you got 67 or so reactors under construction. I think 31 are in China, or being built by the Chinese. I don't think that whether we or not we see a bifurcated uranium market where we see different prices in different places in the world, you're still going to deal with the net global supply of uranium. And if that's being redirected to Russia and China, uranium prices probably will bifurcate if there's a preference. And the resulting uranium price for the Western world is going to be much higher until we, it'll probably be very, very good for underscoring the urgency of building and your own uranium supply sources. And I just think that there's a lot of reasons why supply is going to have a little bit of difficulty meeting demand, especially if we're right about needing to double supply by 2040. It's just going to be, to me, the bigger risk is on the supply side. You got this asymmetric risk where I think that when you've got the demand side, to me, looking less risky than the supply side, you have to be extremely bullish about uranium price, and that's where I think we are. So I think from a political perspective, we're showing awareness of the problem, we're showing support to rectify, but I still think that it's going to take a long time before we have an efficient process for permitting mines, especially in the U.S. where it doesn't necessarily happen that often, and you need to build up that skill set within the country and that experience of reviewing mine permit applications and approving and reviewing environmental assessments and approving. And I think that it's going to take more time than we hope.
Yeah, and I think that's right. Actually, it's quite sort of salutary, sobering conversation in the sense that it's 2 years ago. People are jumping up there, waving their arms about $200 pricing. Here we've had the Bank of America put out a report recently talking about their target for 2025 is $115. The target for 2026 is $135. Now, that's from where we are today. That's a kind of big shift, and it may seem conservative for those who want to see uranium 200. But as a business, owner, as a company looking to build and get into production, surely we're way past incentive price, aren't we?
For sure. If you conceptualize the mines that could produce as actually being through the permitting process, and producing, I'd say, is there a balanced current market based on current uranium price? If we conceptualize some of those mines being in production, I think so. I think that the incentive price, or the current price is enough to incentivize something that would match current demand if you could jump through that process and just turn them all on like a switch. But incentive pricing, I mean, you're going to require some contracting to really solidify those prices, or some much higher prices are going to materialize as supply doesn't come online. When you talk about some of those targets for a spot price, or not sure specifically if you're talking about spot or term, but they weren't clear.
What can only assume spot, because I'm not sure the big bank analysts right now are kind of completely on board. They've been away for 10 years, so I'm not quite sure what they understand.
For me, it's easy to conceptualize a $20 or $30 uranium price increase year over year from right now. I mean, I think this year we averaged to date about $88. I think it was around $60 in 2023, taking the average of the year. But you've got almost a $30 delta last year. What's really changed? We have a little bit more supply in 2023 than we had in 2022, and a little bit more, but nothing to really address that put a significant dent in the current supply shortfall. So in that condition, uranium prices have shown you what they can do. And I do think that they're going to continue to go upward, especially if there's complacency on the contracting side, which I think term contracting year to date is reported is around 53 million pounds. There's another 35 million in the spot market transacted, but I think the spot market's hard to read because 1 million pounds could trade 35 times, and now you've got 35 million pounds. Like, there's churn in there. So, I've always been really focused on the term market because, that is generally moving towards, primary users of uranium. But, the fact that the term contracting hasn't been extremely active this year, it just looks like more complacency. We don't know everything that happens in the term market for sure. But the reported numbers, I think the actual term contracting year to date is lower than every year of the last 7 years. And in 2023, term contracting was high, but the vast majority of it was non-U.S. utilities. So I still think I suspect that we're seeing complacency in U.S. utilities, or maybe they're still holding off, not exactly sure how they should be strategizing around purchasing. But I think that are we at that incentive price? Yeah, I think we're seeing announcements fairly frequently of smaller uranium production getting turned on or ramping up. You're starting to see M&A for assets that would be viable at this uranium price. So do we have a uranium price that's going to incentivize new production? For sure. Is the uranium price, I think it needs to be higher to see the investment in even some of the smaller explorers to start to build the other assets that we're going to need to be mines in 2040 or 2035. 2035 is optimistic, from discovery to mine. Like you said, it's an extremely long process, but we're going to need, or we're going to see higher prices because I don't see the supply catching up to the demand. And that's one of the reasons that I'm quite bullish. And I don't think $115 per pound in 2025 is, not possible. I think it's easily possible, especially if we see any or continued shortfall. Like if any of the smaller contracting that's been done by some of the newer producers needs to be bought in the spot market because they're not, potentially ramping up as quickly as they thought. Any permutation where somebody has to replace uranium that they thought they were getting from production by going to the market is going to push prices higher. So there's a few different mechanisms, I think, that could easily push prices past 115 next year.
Yeah, it's kind of interesting. Right? Even the normally conservative Tim Kitzel talking about, this being, a market with the best fundamentals he's seen for nuclear in 40 years in the business. But even they are being a little bit cautious about the language they use. They're talking about considering expanding some of their mining projects without necessarily being specific. And I just wonder, there's a kind of cat and mouse game here with utilities and other buyers to say, guys, yeah, we keep saying we need to be incentivized. We are going to move at our pace now, and it's going to move from that kind of buyer's market to feels like a sort of seller's market at the moment. I think that can only be good for investors going forward. But look, maybe that's another conversation for another day. I'm Colin. I think we've reached the optimum time for these interviews and conversations, as I'm told by the readers and listeners. Appreciate your time today. Great insight, and I think we've got to do this again because your knowledge, gained from years of analyzing this stuff is superb. So we will stay in touch, and we hope to see you soon.
Yeah, thanks a lot. I really appreciate the time, and I really enjoyed it.